Hi, this is Mark with your analysis for the week commencing the 6th of February. Last week I was showing you how here on the British pound on a weekly chart we were likely to get a 34 and 55 EMA cross, and that this would be the first time in 2 years. The last time we had this cross the move was 6,000 pips. So I was talking in terms of looking for a pullback down to here with a view to a major move forward. And still on a weekly chart that's what I would be looking for. This will complete the cross at the market open, and then we're looking in terms of around 157. But there's lots of things going on here, and I just want to show you a few technical signs. One of which is that this could well be what is known as a flag pattern, and there are videos in the section, in the educational section, explaining all this for you. But the theory of a flag pattern is simply this. This is treated as the flagpole, this is treated as the banner, and the theory goes that you measure the size of the banner for the movement, which is the middle figure around 1600 and odd pips, and the theory is that when the break occurs that you will then get the movement out the other side. However, what we also have here, if you notice this upper blue line, this is MACD down here, and what's happening is price is clearly going up, whilst at the same time on a weekly chart MACD is going down, and this is known as MACD divergence, and the theory goes that the MACD is indicating to you that we're going to get at least a pullback here, which would support my theory for the weekly of back down to this 157. So that's what I'm looking for. Weekly moves by definition take a long time. It's not something you dive into. Spookily, the price stopped exactly on the trend line I had in place last week. So this is a crucial area at the moment, because the final option is if we don't get the pullback, then what we start to looking for on a weekly chart would be a break and a close above here, 160-100, with a view to a long. On a daily, now this is the daily with all the different indicators on, what I'm looking for on the daily is a pullback initially tomorrow to 160 with a view to a long. Watch this Bollinger Band closely at market open. You can see how on Friday this slammed shut, which was a clear indication that price was going to turn back down, at least temporarily. And the areas to look for me for longs, I'm only interested to long, are 160, and if later in the week it gets down to 158, and this may become a situation where we then start thinking, is this a daily move or a weekly? And then down here finally was this weekly EMA that I was just showing you. So if you're trading intraday, main areas of interest is a long at 160, and then if it does get all the way down to 158 later in the week, and on a weekly we are hoping for a major plunge. Now it is British interest rate news this week, so if there was something exciting happen there, then we may well get this big pullback. This is the EURUSD on a weekly. 2 weeks running now, price has opened and closed in virtually, well in this case exactly the same place. It is a clear sign of indecision. However, price has broken and closed above multiple EMAs. We have monthly 55s in here, with previous support and resistance, with daily, weekly. There's loads going on in this area, guys. So for me at the moment, I'm still only interested to long. The point is, where will we be looking for our entries? Well, on the daily, the first one that will scream at us is 135, because it's the whole number, and just above it we've got this weekly 200. If it pulls back further, then I will definitely be looking to long around 134.20, which is the weekly and daily 55 EMA. This will move up slightly at market open. Once again, watch Bollinger Bands on different time frames for clues for entry. This is the Aussie dollar, and you'll notice here I was telling you during the week in the updates that price was outside the Bollinger Band, and what does it do? It either waits for the Bollingers to catch up or it will pull back inside. This Bollinger is likely to go here at market open, and therefore you do expect some resistance. And just a quick look here on the weekly. On the weekly, what happened last week? It stopped at the weekly Bollinger. Watch this at market open. If that swings open, it suggests price is going to go up. I am only interested to long this pair, and the logical area for me is 100.20. And if you recall, in previous weeks I was saying we were looking for a break of this triangle, and what I said was if we got a break and close above 100.20, we would look to go long. Now on the 4 hour this was tradable, because what you had on the 4 hour, price came up, finally went through and then moved away. On the daily, it shot off without us, and I seem to recall it was some big Aussie news. So the major areas tomorrow to look for: 10020 is my main area. This was the main area of support, previous resistance rather, and that would be the main area I'll be interested in. Be very careful with the Aussie dollar. About an hour after the market open, there is some big Aussie dollar news, and this pair has reacted strongly to news in recent weeks. So wait for market open, wait for the news to come out, and then start to think in terms of a trade. Aussie dollar yen. Now on a weekly, this was a huge candle last week. Look at that for a candle. We had altogether 200 and odd pips worth of movement, but it's a big candle. The Bollinger Band has opened, which suggests that it's got further to go. It did break through 82.85 previous resistance, and it's also closed above the monthly 200 EMA. However, it's very rare that you get such a big candle without some pullback. Therefore, market open, the Bollinger will go to here, and I've just shown you how we would then look for a pullback. I would only be interested to long, and my main areas of interest for a long is 82.85 because it was huge previous support and resistance. That will be the area I'll be looking for. If it gets all the way back down to 8200 again, then I would definitely be looking to long later in the week. And my only interest in a short would be if it clears this lot once again. But my priority for the week is to long initially this area here, and later in the week if it gets down to 82. Once again, wait for the news. This is the euro pound on a daily chart, and I showed you last week how this pair, perhaps more than any others, seems to respond and react favourably to fibs. And what I was showing you last week, this was the candle from the previous week had closed exactly on the 78.6 fib, and I showed you how on the way up price seemed to be stopping almost as a ladder. And what happened? On Tuesday, price came down, touched and bounced off, took the pip off the 61.8 fib and bounced up, and where did it stop? Took the pip at 78.6. It then came back down. Yes, it was 100% to the theory here, but what did it do Friday after NFP? It bounced again off fibs. So do watch carefully for fibs with this pair. Now, I was saying to you last week, it was very messy. During the week, I was then looking for a short at 8500. We've got the EMAs rolling over, stochastic pointing down. Everything seems to be pointing down, including on a weekly, and therefore I will be looking once again to short around 84.90 area. This is the dollar Swissy. Now the dollar Swissy, we've had a 5/8 cross, we've had stochastics rolling over. We are still in a downtrend at the moment, and therefore my only bias is short. However, be careful with this one. Because of these crosses, I am beginning to suspect this may have further to go. My first area of interest to short would be 9600, and let's go down to a 4-hour again. Go down to a 4-hour chart, you can see how price stalled at the 200 EMA, it stalled at this trend line, it stalled at a fib. If you're going to go long, you need a break and a close above 9600 with a view to a long. But as I say, my priority and my preference is to short, and I generally only use the dollar Swissy as an indication because of the correlation with the euro. I use it for confirmation for trades with euros. The dollar yen, I cautioned last week the fact that it could well bounce back up because the Japanese government has said they're going to intervene on price. However, the 5/8 cross hasn't quite formed. Priority at the moment for me is what we look for. If you recall last week, I'd said to you, look for a break and a close below 81.90 with a view to a short. And on the 4-hour here, you had numerous opportunities to do this. Price came through, broke and closed below 81.90. 3 or 4 candles later, came back up, touched it almost to the pip, and promptly fell away 50-60 pips. Once again, I will be, at the moment, I'm more interested into short. If I was to go long later in the week, I need a break and a close above this EMA here. So my priority at the moment is to short. If it does break and close above, then I would think in terms of a long. Euro yen, I showed you last week how the monthly candle has finally broken the trend line, and therefore we are looking for potential moves back up. I showed you how MACD divergence was once again giving clues that price was going to bounce back up. So how do we play it? Well, what it is doing at the moment is once again bouncing between this previous major area of support and resistance around 110.80 and 112. If you are of a mind to be cautious, then the thing to do is wait for it to break out of one of these areas. So you would wait for a break and a close below last week's low of 110.75, a breakout and a pullback with a view to a short. If you're looking to long, similarly, you are looking for a break and a close above 112. If you, on the other hand, are going to keep playing the bounces, and we've had a lot of success with bounces recently, these are the areas, guys. These are the places to be looking for. Either breakouts and pullbacks or bounces back. If it bounces again, you may well find it only bounces between here and here. So take a profit or certainly move your stop to entry after 20 or 30 pips. We don't seem to get the follow through on a lot of pairs lately. Dollar CAD, last week I cautioned against shorting here because of the fact it looked bullish. Then on the Monday, price did spike up 60 odd pips and the Bollinger Band slammed shut. We're below this EMA and we then closed below the 100 again, but this was a big candle. What I did say to you also is that counter trend traders would be looking here for a bounce back up. Now I don't counter trend trade, but had you taken this 50 or 60 pips profit in this move, and once again, if it's counter trend, I only take half the stake. Now on the CAD, if we have a look at the monthly, this is the monthly CAD, what seems to be holding it up at the moment is the Bollinger Band. Have a look at the market open and see if it does push open. But you can see, going back to August 2007, price did get down to 90.35. So eventually this will break. So the ways to play it are, for me, if it pulls back up to 99.70 area or all the way to 1,000, then I would definitely look to short. Counter trend traders again may consider a long here, again only half stake, but eventually say this will break. There was extremely good jobs news out for the CAD on Friday. It was treble the expectations of the experts. So crucial areas here, either bounces off again or breakout pullback, or for me a short around 1,000. I would only be interested to short on this pair. It's a little bit messy. After NFP Friday, what we need to do usually is wait for the dust to settle, see what the Asian traders do, and personally I usually trade, apart from the gaps, I usually trade London and wait for them before getting involved in trades. Okay, I will update you tomorrow, and as the week progresses, say be very careful with the news. The Aussie particularly tomorrow is big news, and there is CAD building permits during the day as well. Have a great day.